Sometimes Forex trading is a wild and woolly place to be. That's why Hugh's here, to pose your questions to Walter, the naked Forex guy. Hugh's got questions, and Walter's got the answers. Here at the Truth About FX podcast.
Hey Walter, how can someone determine if a support or resistance line has been broken or not?
Well, obviously you don't know for sure, but these are the rules that I will use, and I can post a video in the show notes. So I'm actually doing the webinar tomorrow, but I will record it and I'll post it in the show notes for everyone listening to this episode. So look, that's like saying, how do you know if your trade's going to be a winner? The answer is we don't know, right? But this is what I will look at. I will look at if the market reaches a support and resistance level. Let's say that the market's going up and it reaches resistance. If it's going up and it hits resistance and it stays there, in other words, each candle, let's say we're looking at the daily chart, the daily candles keep pushing into that resistance level. The longer that happens, the more likely it is to break and go higher. The longer the market sits there and keeps pushing it, the more likely it is to go higher. Now, contrast that with the market that's going up. It's going up. It hits that resistance level. It moves away from it immediately, and then it comes back up. It hits it again, and it moves away from it immediately. Well, now maybe we have a double top. So and the line chart is the clue here. Now, again, you'll see this in the video that I'm posting in the show notes for this episode. But I think the most important thing here is, what are the rules? What does it look like when the market's going to break through a zone, a support and resistance zone? What I've found in my testing is that it usually hangs around the zone. I mean, it just if 7 of the last 9 candles have the wick of the high has pushed into the resistance zone, then it's probably going to break it. Whereas, let's say only 4 candles out of the last 10 have touched that zone, then maybe you're looking at a double top. It's hard to explain this here, and I know the videos will make more sense when you see that in the show notes. But for right now, that's kind of my rule. So I don't look at overbought or oversold or anything on the RSI or stochastics or anything like that. What I'm just looking at is I'm trying to answer this question. Has the market been repeatedly pushing into this zone with the recent candles? And if the answer is yes, then I assume that we're likely to see a breakout. Now, the safe way to play the breakout, of course, is to wait for the market to break through that resistance level, spend some candles above it, and I mean close well above it, and then pull back to the resistance zone and find support there, and then print a bullish candle, a nice big fat bullish candle, and then you can trade off of that. That's obviously a breakout and a retouch. It's as old as the hills in trading, but that's really the way that, that's the way that you can do it. If you just put a buy order on the other side of resistance, you could get wicked into it, and then you end up with a loser. If you wait for the breakout and the retouch, it's just a safer way to trade. So the quick and dirty answer is we don't know if it's been broken or not, but typically the longer it sits there waiting, the more likely it is to break. And that's what I found anyway.
Okay, cool. Well, thanks for that tip.
Thank you.